What if 5 years from now you look at today's Bitcoin price and feel regret? What if this quiet phase is the last calm before a major breakout? Right now, most people are distracted. They think they have time. They believe another big crash will give them a better entry. But markets do not reward comfort. They reward preparation. And this may be your last chance to buy Bitcoin cheap. Stay with me, because what I'm about to explain is not hype. It is based on history, data, and human behavior. And if you understand this cycle, you will never look at Bitcoin the same way again. Welcome back to Money Finance Insights. On this channel, we break down money and markets in simple English. No noise, no drama, just clarity. If you value that, like this video and subscribe right now. It helps this channel grow, and it keeps you ahead of the crowd. Let's start with one powerful truth. Bitcoin has been declared dead hundreds of times. After every crash, critics said it was finished. After every 70% drop, headlines predicted zero. Yet Bitcoin survived. Not once, not twice, but again and again. In 2013, people said it was a bubble. In 2017, they said it was mania. In 2021, they said it was over forever. But every cycle created a higher long-term floor. Zoom out on the chart. The pattern is clear. Bitcoin moves in cycles, roughly 4-year cycles. And those cycles are connected to one key event, the halving. Every 4 years, new Bitcoin supply gets cut in half. That means miners receive fewer coins for securing the network. And that means fewer new coins enter circulation. Basic economics is simple. When supply decreases and demand stays steady, price tends to rise. The latest halving happened in 2024. Historically, the strongest price expansions happen 12 to 18 months after. Not immediately, not overnight, but gradually. Then suddenly. Look at the 2016 cycle. Bitcoin was under $1,000 before the halving. Many said it was too expensive. 1 year later, it ran toward $20,000. Look at 2020. During global panic, Bitcoin fell under $5,000. Fear was everywhere. Within 18 months, it reached near $69,000. Every time, people waited for it to come back down. Some waited forever, because strong bull cycles do not always give deep second chances. Now let's talk about where we are today. We are not in peak hype. We are not in extreme fear either. This is the transition phase. This is where patience is tested. Prices move slowly, media attention is low. And that is usually where accumulation happens quietly. Smart money does not buy when headlines scream all-time highs. They build positions during boredom. They position before excitement returns. Another major shift is institutional access. In the early days, Bitcoin was mostly retail, tech enthusiasts, early believers, small investors. Today, that is different. Spot Bitcoin ETFs opened access for retirement accounts. Traditional investors can now buy exposure easily. Large asset managers are involved. Even a small allocation from big funds changes supply dynamics because Bitcoin has a fixed cap of 21 million coins. The cap will never change. And here's something most people ignore. Several million coins are permanently lost. Forgotten keys, lost wallets. Early coins never moved. That means the real circulating supply is smaller than 21 million. Now imagine growing demand meeting fixed scarcity. That equation does not stay quiet forever. Let's talk about macroeconomics. Global debt levels are rising. Inflation reshaped how people think about money. Central banks expanded money supply dramatically in recent years. Bitcoin was created after the 2008 financial crisis. It was built as an alternative to uncontrolled money printing. It is digital. It is scarce. It operates without central control. That narrative attracts people who want financial sovereignty. Younger generations are especially open to it. They grew up digital. To them, online value is normal. Over the next decade, massive wealth will transfer to younger investors. Capital flows will shift with that transfer. Now let's address the fear directly. Yes, Bitcoin is volatile. It can drop 20% in days. It can scare even experienced investors. But volatility is not the same as failure. Historically, volatility was the cost of opportunity. The biggest gains came to those who held through fear, not those who chased green candles, not those who panicked sold red ones. Here's the psychological trap. Most people buy after price already moves higher. When Bitcoin hits new highs, social media explodes. Friends start talking about it. News anchors debate it daily. That is when emotional buying happens. But early cycle stages feel boring. They feel uncertain. They feel slow. That is exactly why opportunity exists there. Another factor is regulation. Governments are not ignoring Bitcoin anymore. They are creating rules around it. Regulation can feel restrictive, but it also legitimizes the asset. Clear frameworks allow institutions to participate with confidence. The network itself keeps getting stronger. Hash rate continues to grow over time. That means more computing power secures the blockchain. Despite crashes, miners continue operating. That shows long-term conviction. Adoption is also global. In countries facing currency instability, Bitcoin is not speculation. It is protection. It is a tool to store value outside weak systems. That use case grows quietly every year. Now imagine this scenario. Institutions allocate 3% of portfolios to Bitcoin. Corporations hold small reserves. Retail investors return in a new hype cycle. At the same time, post-halving supply tightens. That pressure builds slowly. Then price discovery accelerates. Will there be corrections? Yes, there always are. But corrections inside an uptrend are different from bear markets. Understanding that difference changes your mindset. Cheap is relative. In 2017, $3,000 felt expensive. In 2020, $10,000 felt high. In 2023, $30,000 felt risky. Years later, perspective changes everything. When people say they are waiting for cheap, they often mean they are waiting for certainty. But markets do not offer certainty at the bottom. They offer fear. Many disciplined investors use dollar cost averaging. Small, consistent purchases over time. No emotional timing, no guessing bottoms, just steady accumulation. Risk management still matters. Never invest money you cannot afford to hold. Short-term swings can test you emotionally, but long-term conviction requires patience. Technology development continues quietly. Layer 2 solutions improve speed and scalability. Developers keep building. Infrastructure today is stronger than ever before. There is also the supply shock concept. After halving, miners receive fewer coins daily. If demand remains steady, exchanges see less supply. Less supply means buyers compete more aggressively. That competition pushes price. Long-term holders also reduce selling early in bull cycles. They wait for higher levels. That further tightens available coins. Now imagine watching this video in 2029. Bitcoin trades far above today's levels. Everyone calls it obvious. New investors say they wish they had acted earlier. You remember this calm phase. But I do not want you acting from emotion. I want you acting from understanding. Study historical 4-year windows. Look at previous post-halving periods. Notice the pattern of expansion. Markets move in waves. Consolidation, breakout, euphoria, correction, then repeat. Right now feels like consolidation, and consolidation often precedes expansion. Could macro shocks create temporary drops? Absolutely. Recessions affect all risk assets. Liquidity crunches impact markets broadly. Bitcoin is not immune to short-term pressure, but long-term adoption trends matter more. Infrastructure improves each cycle. Public awareness increases each cycle. Institutional involvement grows each cycle. Scarcity remains constant. Only 21 million coins. That mathematical limit is powerful, especially in a world of expanding money supply. Timing the exact bottom is nearly impossible. But positioning before the crowd arrives is realistic. That is where asymmetry lives. At Money Finance Insights, our goal is not to promise riches. Our goal is to help you see patterns clearly. Financial literacy changes outcomes over decades. Ask yourself this. If Bitcoin follows historical behavior, what will today's price look like in 5 years? Will it feel expensive, or will it feel like an opportunity missed? Your future self depends on decisions made in uncertainty, not in comfort. Not when everything feels obvious. Before we close, I want your honest opinion. Do you believe Bitcoin is still early, or do you think the biggest move already happened? Comment below. I read the discussions. Your perspective matters. If this breakdown helped you think differently, share it with someone who keeps waiting. Sometimes one video changes someone's financial path. Remember, this is not financial advice. Always do your own research. Understand your risk tolerance. Never invest blindly. But do not ignore patterns either. History leaves clues. Cycles leave footprints. And those who study them move differently. This moment feels quiet. It feels uncertain. It feels like there is still time, but markets can shift quickly. This may be your last chance to buy Bitcoin cheap in this cycle. Not because of hype, not because of emotion, but because of how supply, demand, and psychology work together. Opportunity rarely announces itself loudly. It whispers during doubt. It hides in boredom. It rewards patience. Thank you for spending your time here. Time is your most valuable asset, and how you use it matters. Stay disciplined. Stay curious. Stay informed. This is Money Finance Insights, and your financial future is built decision by decision. Years from now, I hope you look back and say, I paid attention, I learned, and I acted with confidence. I will see you in the next video.